So preparing for a market crash is really pretty easy. You just buy some gold and then just hope the market crash never happens. Okay, so how do you prepare for a market crash? Well, you don't ask someone like me to begin with, but I'll just tell you some of the things that I'm doing. Before we jump in though, I just want to say that I'm not making this video to play up fear of a potential market crash, fear of runaway inflation, hyperinflation, any of that. I just don't make videos for that reason. So I won't hype anything that's going on in China. I won't tell you to dig a bunker, and I won't tell you to put all of your money into gold. And actually a bunker might be kind of cool, and gold is kind of cool too. But back to reality, I have been planning for alternatives to the stock market for practical reasons. Now, I'm not a financial advisor. I know that that's kind of a joke by now to say, but investing over the last year and a half has really been one of the easiest times to invest that I know of. Everything went up, and that's not really based off of any wide-scale investor intelligence. It's just based on the US buying treasuries and mortgage-backed securities. The Fed was flooding the market with cash. Really, they were preventing a crash with brute force buying. And then when you add to that the stimulus checks that went out to millions of people, well, everything from Pokemon cards to Dogecoin just blew up. People had lots of play money to invest, and the Fed has been propping this whole thing up all along the way. And I don't mean to say that the last year and a half hasn't been difficult, don't get me wrong there. All I'm saying is that the markets were on the easy setting. It was like we all had the Konami code plugged in. But I think that's changing going forward. This is where I could talk about inflation or whatever today's popular crisis is. But to me, it's more about the whole picture. At some point, the Fed stops pulling the levers, we get tapering, and that's going to result in some kind of stagnant market. And I don't know if that means a crash or correction or consolidation. I just think that we're going from a market where everyone was making money and everyone was a genius to one that's just going to be a lot harder to do well in. And you're seeing it in all the markets. We're even seeing it in gold. It's been happening for a while now. Part of this is just simply that so much depends on what the Fed has to say at any given time. And sorry for international viewers, I'm really focusing a lot on what's going on in the US. But here, I like to think that I'm familiar enough with macro trends that I can forecast price moves a little bit. But then Jay Powell or Janet Yellen get on camera and then everything's out the window. So let's just start with basic inflation because that affects everybody about the same. I think that we're going to see real inflation eat away the buying power of the dollar over the next few years. I don't think that that's a big stretch for anybody, and I don't want to simply leave a lot of cash and savings because of that. I have cash savings for 6 months of expense. I have a little bit more for the inevitable April tax shortfall. And then gold to me, well, it's a lot like cash savings, except that it would hypothetically gain in value if things got bad. So I'm continuing to buy gold each month. Because this is a gold channel, I'm going to talk mostly about that here. But before we get into it any further, I figured that I'd mention just a few other things that I'm doing that are new and really revolve around preparing for potential market, again, crash, correction, whatever you want to call it. My personal opinion here, though, is that a slowdown is just kind of a foregone conclusion. A crash, well, that's a possibility. And you can decide for yourself how likely you think that that is. Again, that's just my perspective. So first of all, in the markets, well, I'm continuing to contribute to tax-advantaged 401k accounts, IRA accounts, and I do that at the maximum contribution level. And I have those set up to automatically buy into total market indexes like what you'd find in Vanguard or Fidelity. And then I automatically buy specific stocks like Apple, and then I'm just starting to come back in on Tesla. I have a few others in there, of course, too, but I won't bore you with the details. In my brokerage account, though, I'm buying specific stocks only. I like a lot of the same stocks that I have in my retirement account. Those are primarily tech stocks, but then I also pay attention to gold and uranium stocks. I have a few miners and have a few royalties in each. And then I've played around with a few of the meme stocks like GameStop and AMC, but like I said earlier, last year and a half, it's really been a perfect environment for easy wins. Normally, I wouldn't touch those kinds of stocks with a 10-foot pole. It was basically gambling. And as we go forward and some of that easy money from the Fed tapers off, well, the performance is going to be a lot less certain. Still going to be gambling, but now we're going to be doing it against the house. So dropping real money into GameStop, Dogecoin, that's not going to be a big part of my plan if I'm preparing for a downturn. And with that feeling that the whole market could be softening up, I'm just not putting as much money in the market to begin with. And those stocks that I am buying, well, they're a little bit safer. Some of that is going to be gold or energy related. I just think it's going to get harder and harder to invest over the next few years. So there's just no way that any of us know what's going to pop up in the news cycle or Twitter for that matter. And that just has a lot to do with how these investments are doing. Crypto markets, they're getting very strange too. And I wouldn't even mention this, but before I get back into gold, I just want to give kind of the full picture of what I'm doing. And it does involve crypto to a certain extent. Now, Bitcoin and Ethereum, they're not showing those consistent gains like they were a year ago. So to make money in that space, you really have to dive down the altcoin and the NFT rabbit hole. And if the stock market felt like gambling, well, this is like gambling on like Red Bull vodka. And it's everyone. Everyone is drunk. Everyone is hyper. It's not just you. Now, I'm not really one to give advice here because I'm just not smart enough. But once you have money into certain crypto tokens, you can do one of two things. You can hold on to them and hope for gains. Do a little bit of that with some Bitcoin and some Ethereum. Or the second thing you can do is you can stake them and you can get a return like you'd find from personal lending options like REITs or REIGs, which are just real estate investment options. The difference here, of course, is the tech that it takes to do it and then what's behind it. Obviously, with the real estate investment, you've got an apartment complex, you've got a commercial real estate building. With cryptocurrency, well, you have people's hopes and dreams. So I have some real estate income that I turn around and lend to a REIG. That's a real estate investment group. And that gets me somewhere in the 7 to 8% range annualized. That's pretty easy, it's pretty safe. Staking certain altcoins, though, is going to get you 10%, 30%, or a lot more. And then on top of that, you have the growth of the actual coin itself. So it's something that's pretty hard to ignore, but you really have to decide for yourself whether you'd want to lend money to a residential apartment developer or you'd like to stake something on a network that maybe you've never even heard of. It took me a little bit of time to come around to it, but I like Solana, I like AVAX. I'm staking Polygon, Ohm, and then next week I'm going to be staking KlimaDAO. Hopefully I'm saying that right. If those words don't mean anything to you, you can just ignore that whole part. And with real estate, again, it's safer, it's easier. There are places like Fundrise and CrowdStreet online. They're two easy ways that you can get in on smaller scale real estate investing. And I would say that that's pretty similar to staking cryptocurrency without the public drunkenness. So really it comes down to risk tolerance and then probably how technically savvy you are. A cryptocurrency, it's weird, it's strange. Honestly, I have a little bit of trouble even understanding it all myself, much less explaining it. Real estate, it's pretty straightforward. Okay, so back to gold. Probably spent more time than I needed to on the other investments, but it gives some background to where I think gold fits in specifically. And the reason that I like gold isn't that I think that its price is going to the moon, it's that I know that I can always get my money out of it. And that's not really something that I can say about cryptocurrency with those staked coins. I can't say that about some of the riskier stocks, and I can't say that about the multi-year real estate investment contracts. So gold tends to go up if the markets go to hell, and it stays liquid, and that part's really important. It's a safe investment whether you want to use the word investment or not. Now, my monthly purchase has been 1 ounce of gold a month lately. I watch prices and I buy on dips to the extent that I can, and I have been buying more if the dip is big enough. In full disclosure here, part of me buying more is just simply that I have a channel devoted to it, and I don't need the ad revenue to pay other bills. I think that you'll find something similar for anyone who has a YouTube channel. But a base monthly purchase has been important to me for a long time, well before I had this channel. And building up that base of gold has felt more important since everything went crazy last year. I think it's just good planning, and that base gold purchase is something that I do as a rule, where buying cryptocurrency or all the other things, the swapping, the staking, whatever it is, that's a decision I have to make each time. Now, I've been able to carve out about $500 or so for monthly expenses, and that has allowed me to buy that 1/4 ounce of gold a month. And I will do that regardless, unless something really big came up. Beyond that, though, anything more than that, well, that's coming from profits from some kind of other investment. And I think it's important to point that out because I wouldn't be buying as much gold if it was keeping me from buying into other things that drive profit. Now, I don't want to buy gold if it prevents me from making investments. So $500, that is just the monthly gold budget that I have. At $2,000 for that 1 ounce that I mentioned, well, $1,500 of that is coming from some kind of profit. And if that profit wasn't there, well, I would have to be stealing that $1,500 from something else I was doing, some other kind of investment, just to be able to make those kinds of purchases. Now, if gold is your investment, I'm not going to argue with you, but I don't personally see it as a profit center. I see it as a control point. I've seen people use that misleading gold versus the S&P statistic, where if you were invested in the S&P on the verge of the dot-com crash in 2000 versus buying gold at the same time, well, gold would have outperformed the S&P. I think gold is up 6 times over that time frame, where the S&P is up 4 times. But again, it's pretty misleading because gold was at an extreme low and the S&P was at an extreme high. And if you wanted to compare that against something like Apple stock, something that I've been buying for a long time, well, Apple was at about $23 20 years ago, and it has split several times. It's currently around $142, so Apple is up something like 120x versus the 6x that gold is up. It's tough to even do that math, but it really doesn't matter though, because nobody invests that way. Nobody drops their lifetime investment capital into any one thing 20 years ago. You buy all along the way. If you do figure out how to do that and get a time machine working, well, just make sure not to buy on the verge of the dot-com crash. The point here is really just that buying gold does not outperform buying stocks. Shouldn't have to be said, but there are people trying to tell us the opposite. So if you're preparing for a crash, it stands to reason that you'd stop buying into the market that you think is going to drop, or at least you'd change your buying behavior. And that's what I'm doing with stocks. I've slowed down and I've transitioned some growth stocks to safer buys. With gold, I'm continuing to buy without any real change there at all. Like I said, I'm at about an ounce a month, but I'm supplementing a lot of that purchase price with outside profits. I wouldn't be buying quite that much if I didn't have those profits to begin with. And then with everything else, I'm just changing things up a little bit to focus on investments with actual returns. It's a little bit easier to say that than to do it, but it's always worked out in real estate, and I'm finding that there are other options out there. Let's end with gold though. Planning for a crash to me means having a significant backup fund. So part of the reason that I'm continuing to buy is that I think it's going to hold its value over the long term. But the other part is that I want to make sure that I have an asset to sell down if I need it. I think gold plays that part pretty well. And if we do find a top on the recent Bitcoin run, Ethereum run, I'll probably be selling that off as well. And there's a good chance that I'll be putting a lot of that into gold. So that's it for me in a nutshell. Let us know if you've changed things up yourself. Maybe this year is different based on what you see coming up next year. And then while you're there, be sure to hit the like button and make sure that you're subscribed if you're into the topic of gold and silver. And if you're still here, thank you again for watching. I always appreciate your time. Take care.